Good morning guys. Morning Zeems. Nice to see you again. Balas, how you doing? Nice to see all you guys. Hope that we all had a good weekend. Sorry it's a little bit late today. But I think, to be honest, 10:45 is probably going to be normal starting time, especially with how London's been recently, guys. Because obviously it's been a little bit slow during London and pre-London. So, you know, no point in just watching this move like how it has been, well, last week in particular. Hi Stanley, how you doing? Yeah, I'm really good, thanks. Seems had a nice weekend. Hasn't been anything too exciting happening in my life. How's Alessandra? How you doing? Sharif, how are you? Just gonna give it 2 minutes, guys, and then we can get into doing some analysis. I have obviously marked a few things out already. I think we are also all looking at the same stuff kind of on GJ. I did see there was a couple of charts in the Telegram, which I can quickly pull up here. We got Balas's chart on, I think this is both gold and GJ. So yeah, let's take a look at some of these charts quickly, guys. So this is a GJ chart. We have the potential sells below 153.95. I think that's, obviously we've already broken below that level, but we haven't got the candle close below that level. So let's just try wait for a candle close below that level. And then I think it's going to be quite easy sells. That's also the break of Friday's daily low. So we've actually already broken Friday's daily low, but we kind of wicked back up. So it would have been people taking impulse entries at that stage. And then, yeah, it's going to be risky buys above this level. Obviously, this is where our structural flip will come. But I do think that based on the higher time frames, we are going to continue bearish. We had a really, really bearish day on Friday, and Thursday at that. So yeah, let's just wait and see. Otherwise, very nice chart, nice clean zones. You've included the 3v1 bearish market structure. I think everything is bearish except for the daily time frame, guys. It's only the daily time frame which is bullish and will remain so for quite a while. So yeah, very nice chart. We'll get into the news just now. Let's see what else we have here. We have another, just looked at that one. We had a gold chart here. Potential buys above 1840, also have that. Then further potential buys above 1844, which is fine. Risky sells below 1835 because we'll be, well, at that stage actually the 1 hour time frame may flip in structure. Let me just check. No, so that will also be a counter trend trade. So yeah, I do see why you've put your risky sells below 1835, and yeah, perfect zones as well. You know exactly where you want to see a trade happen. You know exactly where you want to see the candles form. So yeah, really well marked out charts, and good stuff, including the structure, because I did say I wanted to see that last time, and yeah, very happy with that. If we have any other charts, guys, please send them in. Zeems, you sent a chart last night on gold, and yeah, we are basically playing around in this 63 pip range at the moment. We've kind of cleared most of it. We're almost up at that 1840 level. So I saw there wasn't exactly clean entries on the 1 hour. There was, I suppose you could say that this would have been a possible entry over here because we had the candle close above the resistance level and then a wick down, and then we had this continuation up till this 1839 level, but it wasn't very clean. It was quite choppy. May possibly have been, if you were taking that trade, you would have probably ended up managing it to a point where maybe you would have closed half, so not would have come out with the exact outcome you wanted. But yeah, really good zone marking, because you can see how we moved down clean easily, so we should move up easily. And we didn't move up the easiest, but we did basically cover that range. And now, obviously, based on where we are at the 30-minute, we want to see a candle close above this level. So yeah, that is charts from the Telegram by the looks of it. If anyone else has any charts, I think we are more or less all looking at the same thing. Let me get into breaking down GJ top down for you guys. So last week's weekly prediction was more or less perfect, guys. We did say that when we start breaking this weekly low, it's going to be a very similar situation to when we formed support at a weekly level. So here we formed resistance at a weekly level, and then we've formed resistance again at that level. Here we had this obviously very strong support level, And then it happened again where we formed support on the support level, respected the previous weekly low. Here we respected the previous weekly high. And then what ended up happening was we broke the previous weekly high in this situation. And here we broke the previous weekly low. Obviously had the clean candles to the left. Again, that's just your candle sort of formations. You want to see that respecting of the low and respecting of the high, just depending on whether you want to see buys or sells play out. Obviously in this situation, when we saw this respecting of the previous weekly high, and then we also formed resistance on a previous level of weekly resistance, very strong indication that once we get this wick up, because that's going to be a retest on your lower time frames, the daily, the 1 hour, the 4 hour, and then even dropping down to the 1 hour. And then obviously when we came down to this level, we don't just take the sell on breaking the low, we then want to see the lower time frame confirmations as well. So you'll see that we broke this weekly low and then came all the way up here. So obviously if you took it on the break of the weekly low, you would have been holding quite a lot of drawdown. But then we came back down and then basically got to this level. You can see we broke through a lot of daily support levels. So if we now drop down to the daily time frame, you can see here we had daily support level over here, which we did reject on this daily candle. This was on the 19th. And then we finally got a close below that level. That was on Thursday. And then Friday's candle just sent it down straight through another daily support. And now we've closed more or less on or just below that daily support level. We've now also, what makes me think we're going to continue bearish, guys, is we've had this wick up, which on the lower time frames has been a retest of a previous level of resistance and then come back down. And now we have broken Friday's daily low. If we mark that in, you can see we have actually broken the daily low. Whether you took an entry based on that, obviously that's a bit risky, but we want to see the lower time frame confirmations, and then we can more or less confirm that we are going to be bearish. We also have this clean range to the left on the daily, and if you look, I'll show you guys once we drop down the time frames. Most of you guys who have marked out your GJ charts already will see that there are clean candles on the lower time frames. So based on the weekly and the weekly is obviously bearish, the daily is bullish. But the only reason that the daily is bullish is because of that high created, and we never got a candle close below the point which created that high. Other than that, all the other time frames are bearish, guys. We had a very, very strong bearish day on Friday. You can see here, this is our 4 hour support level. We're currently more or less on or just below a 4 hour support level of support. So if that's our previous 4 hour level of support, you can see we're basically forming support on that level at the moment. So we do kind of want to see a 4 hour candle close below that level. That's only going to show in about 2 hours though, because that's when this 4 hour candle closes. So what we're going to wait for is the lower time frame confirmations. You can see here now we also have 1 hour support at that level. We may as well mark out the resistance as well. This is probably going to be our most relevant resistance, because why, if we break above that, we got the clean candles to the left. What I would then be looking for at the moment, obviously, guys, is going to be a candle close below this level or a candle close above this level. I'm way more interested in the sells than I am with the buys, but you just never know with GJ as well. So you can see when I was talking about we had that wick up on the daily, and that's going to be a retest of a previous resistance level on the lower time frames. You can see here this was a level this was created on Friday. So this was a resistance formed on Friday. Then when the day started today, we came up, retested that level of resistance, and then now are pushing down. So, yeah. What I'm definitely going to be looking for, now we've got our candle close more or less below, it's our lowest candle close so far. So what we want to see is obviously now a retest of this zone, which is currently happening with this wick up. You'll see on the lower time frames, that's going to be some resistance forming at this previous level of support. And then I kind of want to see a break. I mean, the safest entries are definitely going to be below 153.892, guys, but obviously that's quite a way down. So if you want to take the riskier entries and just kind of think that the London Open's eventually going to show some volume, we can maybe take some more aggressive entries. Or what you can do is, if you want to play it safe but also have the better entries, is use dynamic lots. So that would basically be, let's say, for example, you're using a 1 lot, you would open 4 0.25 lots as you start coming down. And that way your first entry is at an aggressive point, your second one as well, and then your last entry is going to be at the safest point. That's opposed to using a static lot. So yeah, I'm looking for potential sells. Could probably shift this down a little bit, because obviously now we have this level. I'm looking for potential sells below 153.997. Well, obviously now it's going to come below this level if we're going to play it safe. Otherwise, maybe slowly as we come down. And then I'll be looking for buys above 154.466. The reason why that's also an important level is this is where our structural flip will be, and then we're going to have that 2v2 bullish bearish market structure. Because remember, if this is our low which we've created, we look for the 2 candle pullback. Here's that 2 candle pullback. So if we get a candle close above this level, then we're not just going to have the bullish structure then, or the 2v2 structure, so it's actually going to be a shared structure. We're also going to have the clean candles to the left up till about 154.689. But that's very far away. So obviously, if you're looking for more aggressive buys, you could look at, if we respect this range, which we're currently in, you can see we are more or less ranging a little bit or stuck in a higher time frame range, then you would be looking for maybe risky buys above this level over here because we have the clean candles to the left. So right now, let's just wait. Hopefully we do get this bearish push, guys. We have a lot of clean traffic to the left. Let's just go look here. You can see here our clean candles are all the way down to about 153.586. I would expect us possibly not to do that whole move at once and maybe come down to 153.738 at least. GJ's 3v1 bearish, yeah. 3v1 bearish, it's only the daily time frame which is bullish in market structure. We can just mark that out as a possible area to get up to if we do start coming above that 154.466 level. So we have about 5 minutes left, guys, so let's just wait and see what we're going to get with the clear candles to the left. Remember the swing buys? Yeah, exactly. That was on the weekly. That was a swing entry at the break of this weekly high, which worked out really nicely, to be honest. So yeah, we're just gonna have to wait till London open, guys. No rush. Let's just wait and see how candles start forming. If we obviously form support at this level, we can expect maybe us to play around in this region a little bit longer and then start making our way down if we are going to continue bearish. Otherwise, we need to see us at least get above this level to say that, okay, there's a good chance that we can continue bullish for maybe a day and form some daily support. Because at the moment, it's not looking at all like there's any hint that we are going to continue bullish. There's no higher time frame bullish candles really forming. This is, I wouldn't even say, this is more or less a retest. So you can see here, if we look at the 4 hour, we obviously had the support level. We've now formed resistance on a previous level of support. What that is our break and retest. So if this was our support level over here and we break that to form a low, then we come back up to that support level and turn it into a resistance level, exactly what we've done here, and then come back down to retest this low. That's your break and retest, often indicated that we are going to continue in that direction then. So that's why, again, the higher time frames are also indicating to us that there could be a good chance of bearish continuation. Obviously, price action below this current 153.997 level is going to be pretty good. Let's just wait for a candle close, or this candle to close. If this candle closes weak bullish and then we break that with London open, I think that sells could definitely be a possibility. We must also remember that this is Friday's daily low, so just be aware of that. We can do gold after London open, guys. We only have about 2 minutes till open. Not liking how this candle's closing at all. Obviously, it is by respecting the low of the previous candle and closing quite strong bullish, so forming a support. It is indicating that London open could possibly maybe come up to this level of resistance, or maybe a little bit further, but I don't want you guys to start thinking if we come back up to this level or in this region that we're now bullish, because all that could happen is we could get this strong move up, respect again this level of resistance, and then start coming back down. because that's going to then give us a very good chance to get some earlier entries. So basically entries at these sorts of levels, but with clean candles to left. So taking these cells at these sorts of levels would have been quite tough because we didn't really have a clean candle to left. We did under this level, but again, there was no real confirmations for those trades. So just waiting at the moment, guys. Nothing too exciting happening. Forming some very strong support by the looks of it. Yeah, I'll help you, Zeems, for sure. I see markets is really easy to set up. The magic keys is a little bit tougher. The magic keys is gonna take a little while to get used to, but once you get used to it, you'll start thinking, how did I trade without magic keys? If you guys haven't invested in a risk management tool, I'd definitely advise getting magic keys in particular. Otherwise, there's one called Pips Trade Management Tool, which is also very good. All of these things are gonna decrease your, if you know how to use it properly, obviously decrease the amount that you lose, you know, make your losses smaller for sure. Okay, we haven't really, this isn't a great pre-landing candle either. So let's wait and see. Thinking maybe if we come down below this support level and break the support level could be indication that we are going to continue bearish, but otherwise I'd be expecting us to maybe form some resistance at this level if we're going to continue up, or form some resistance possibly at this level or this level. These are all possible key levels. Why it would be key over here is because this would be support turned to resistance, and this would be respecting a level of resistance as well as the bearish market structure. So again, guys, I'm not really interested in buys at all, even if we do start popping above this level, unless we get a candle close, and then a counter trend trade is obviously more likely, because then you're not respecting resistance level, got the clean candles to the left. It is still counter trend though, very important to remember. Okay, we are coming down, so let's see. Good morning, Antonio. How are you doing? Hope you had a good weekend. See what gold's doing. Gold is stuck in a range still, guys, so no point trying to trade gold at the moment. Yeah, just looking at the lower time frames on my other screen here, guys, and it's not looking very, very good either. So just looking at the 5 minute, we are trying to obviously respect this 5 minute level of resistance, which we've respected while we formed it back here after we formed support and then resistance at that level. Respected that 5 minute resistance once. If we can respect it again and get below this 5 minute support level, it could be an early indication that we are going to start this bearish push. But again, we obviously formed a strong level of support, so it's not going to be easy. I think GJ will range a bit because my big push down. Yeah, obviously once you get these strong bearish pushes, it is going to be possible to see a little bit of a pullback or a bit of a range and then continue the overall move. So just be aware of that, guys, as well. How's the neck? How are you doing? No stress. Yeah, if we didn't have this bullish candle form, of course, then I would say we need to watch out for exhaustion. But normally when you have a strong push and then get a candle or maybe two form after that, then obviously that's going to be your pullback or your exhaustion happening. And then once we start that bearish move again, I'd say that's a very good opportunity to then start scaling into some moves. So we just need to see where we close. You can also start using the 15-minute as an indicator, guys. Obviously, if we start forming some 15-minute resistance at this 30-minute, at this other 15-minute level of support, then it could be indication again that we're going to continue bearish. I really do want to see sales today, guys. So just need to be patient. Wait for our opportunity. No point in rushing it either. Now move this down a little bit. Remember, guys, it's always very important. So a pretty good example as well. If this was our level of support, which we had marked out, and then we moved this down a little bit, obviously we want to be adjusting our zones all the time. So if we form support under our marked out level of support, then we need to adjust our zone. So we don't just leave our zones. We need to keep moving them around. Definitely wouldn't be surprised if I saw us come up to this level and then started rejecting that level. Obviously, we've now respected the low of the previous candle, wick down, broken the high, and now we could see ourselves come up to about 154.165 and then continue bearish. And then obviously if the London Open volume is here, so obviously it is coming a little bit late, then we could see ourselves coming up a little bit higher, maybe up to these levels. We want to see us maintaining this bearish market structure though, guys. That is the most important factor. Gold coming up a little bit. See gold on the 1 hour. Taking a buy would be quite risky. Gold buys on the 4 hour looking very good though. Above 1839.68. Because now we've had our wick down. We've got clean candles to the left up until about 1842. So the only problem with taking a buy on gold, guys, if we're going to base it on the 4 hour time frame, remember whatever time frame we base our trade on, that is where our technical stop loss levels also going to have to be based. So if we're basing our trade on the 4 hour and we then need to use the low of the current 4 hour candle as our stop loss. Now the low of this 4 hour candle is 32 pips away. So if that's the situation that we're looking at, obviously we're going to be able to manage risk on the lower time frames when we start breaking some candle lows. But that is where our technical stop loss level is. So I definitely do see some really good buy opportunities on gold based on the 4 hour time frame. But my stop loss is obviously going to be a lot bigger, meaning that I think I'm going to have to definitely lower my lot size just to we're definitely not bullish on the 4 hour, Alessandro, on gold, but I'm just basing it on how the candles are setting up. So you can see here we had our high, this is the point which created the high, close below there, so this is our low. We are bearish at the moment until we get above this point, but that's on the 4 hour. But what's happening here is obviously we had this range, broke out the bottom side of the range, closed straight back in the range. So there's your 4-hour fake out. And now we're respecting candle lows and not respecting candle highs. So that's often an indicator that you're going to continue bullish. We also got the clean candles to the left as well. So now you have two options, guys. You have either waiting for the candle close, or you're going to be taking impulse entry based on hoping that volume is going to come through. Just checking GJ as well. How's it, Nicholas? How you doing? Seems you want to wait for the close. Yeah, no problem, Alessandro. Waiting for the close might be the better option, but it's also important to realize that we are at a time of high volume. So this push could just happen. I did take an impulse entry on this trade based on the 4-hour. So entry looked something like this is what the position is going to look like. And then stop loss below here. But obviously if price starts coming back down, I'm going to just manage the trade. Don't know where this is going. Entry was obviously a bit higher because I don't want to take it just based on that. Failed my learners by white bark and entered a short on gold. I'd say that the shorts on learners you can sort out any time, but the shorts on gold I'd definitely be worried a little bit about. Currently in a long position on gold, guys. I am in a gold buy. Obviously at this point I'm moving my stop loss to break even. It's up pretty nicely. Gonna secure a little bit. It's first trade of the week, so just secured about 90%, and moving my stop loss to break even. I'll post that one on Instagram. Let me just move my stop loss. So again, guys, mainly based on the 4-hour time frame that we saw here, that obviously we had a clean candle to the left. This 4-hour candle had respected the low of the previous 4-hour candle. We didn't respect the high of the previous 4-hour candle. So this was our retest you would have seen on the lower time frames of those support levels. And then we had the clean candle to the left on the 4-hour, the 1-hour, and the 30-minute. We had a time of high volume, which is obviously London open. And yeah, just impulsed. Another thing you could have looked at, guys, based on the 30-minute time frame, is obviously this was quite a strong level of support. You can see we formed it over here, we wicked into it and rejected it 3 times, so 3 candles, and then we didn't respect this resistance level. Obviously it is a much higher risk trade, guys. It's an impulse entry. Did you bag that impulse? I did take the impulse, yeah. Let me just post it on Instagram. About to come back down to entry, sorry. Okay, that's on the story if anyone wants to go look at where the entry was. GJ, we're just gonna have to wait, guys. We are just gonna have to wait. Still have a runner in this position. Okay, Where's that position gone? But I do need to obviously be aware that there's a very good chance that the runner is going to be stopped out to break even. That's often what runners do. And it's also important to remember, guys, first trade of the week, you just want to get your 10 pips and get out of there. Don't try hold it and get a massive trade with massive returns. Try to do like 2% on your first trade, 3% on your first trade. Rather try and just get your 10 pips. Again, guys, don't aim for a monetary amount, rather aim for a pip amount. It's much, much better. It's going to improve your mentality a lot doing that. Rather than saying I want to make 1,000 of whatever the currency is. Rather say I'd rather aim to make 10 pips today or 15 pips today. Going to cry, gold is killing me. Yeah, Nick, I think you should definitely consider risk managing that trade if you are down quite a lot. Otherwise, yeah, I don't really know what else to say. To be honest, if you're down so much, I would just close the trade. There's no point in holding on to it. Yeah, it makes sense why we're rejecting this level as well. We're sitting on a resistance level. 4-hour resistance. It was a nice little impulse, guys. Really, really nice start to the week. Happy about that one. Now, GJ is something I'm going to try to be targeting for longer term holds. So based on the daily time frame, obviously I would like to see us continue bearish and maybe fill most, if not all, of this daily range that we have to trade into. That would be ideal. I mean, at the moment, if you look on the daily, the clean candles on the daily, we have about 70 pips or so. Obviously, when we drop down to the 1 hour, we don't have that much range to trade into, or even the 30 minutes clean candles worth, but there's still going to be a lot. And if you're basing a trade on the higher time frames, again, obviously you're going to have to hold it for usually a little bit longer than if you're basing on the 30 minutes or the 1 hour. So just seeing if gold's going to continue. I'll be happy to see, like really happy to see 1842, but I do highly doubt that we will continue up to that level, especially off such an impulse. Could do that, never know. So guys, this isn't my exact entry. I took it a little bit higher. I didn't just want to take it based on us. Again, I always talk about this with impulses. You want to probably take it about 2 pips above the break of the high that you have, the resistance level that you have marked out, or 2 pips below the support level that you have marked out. You never want to take it literally as we break the resistance level. I don't know if you guys have also found this problem recently, but my arrow buttons actually don't work when it comes to moving a long position up or down anymore. If you guys also have that issue and have managed to fix it, or don't have that issue, please let me know. But I literally can't. I have to scroll it up and down. I can't use my arrow buttons anymore. I'm not too sure why. Or I don't know what trading view's done. Crypto down, Forex portfolio down, stock portfolio down. It's just one of those weeks, bro. Don't stress too much. It's actually the start of the week, so yeah, don't worry too much. To be honest, if you're risk managing, all those downs would be half of what... Okay, I understand with crypto and long-term holds, it's much, much harder to risk manage. But with Forex, I mean, yeah, very, very easy. If I was in a sell right now, I would have been out so long ago. I mean, depending obviously on where you took your sell, but if you were taking it based on this resistance level, your stop loss probably would have been above this candle. and then you would have scaled out your position as you started coming up. That's just an assumption. I'm not too sure where your position was. Gold is pumping quite nicely. GJ, it will be really, really nice on GJ if we do reject this resistance level, or this whole level as a whole, and now form a resistance. So if we form a 30-minute bearish candle, and then I definitely think that there's a great chance to continue into this region. I'll definitely, if we start seeing the candle formations that we want, coming back down to this 153.939 level, guys, I will be selling, that is for sure. Because now if we can form a 30-minute resistance as our next candle, again guys, that's your break and retest. So we had support, broke that support, we had resistance, we came back up to that support, then formed resistance, that's your break and retest, and then good chance that you're going to retest the lows and create a new low. So that's what we need to aim for. Just wait for the candle confirmation, so that is very, very important. We are kind of forming that resistance on the 15-minute, which is great to see as well. Very weak bullish 1 hour candles, which is now flipped bearish. I definitely do see us coming down. So let's wait and see, chaps. Let's wait and see. Down there. Be nice to get something out of this runner. Runner was up a couple hundred, but down. Oh, it's down into double digits now. Yeah, about £90 on that runner. If anyone else did take the gold trade as well, guys, really well done. Let's get into some news as well. So fundamental wise, we don't really have anything important happening today. Much later we have the PMI on dollar, not huge. Also PMI on the pound. So that's going to be at 11:30. So in between London and pre-New York. And then I know it is medium impact folder, so we can be expecting, you know, a little bit of movement in the markets, but nothing too serious. They're also expecting pretty similar numbers to before, but again, don't take these too seriously. Coming up over the next few days, I know Wednesday is going to be a very high impact day on the US dollar. There is a lot of US dollar news coming out. So we obviously have FOMC, federal funds rate, and CPI quarterly. So it's going to be that's on the New Zealand dollar, CPI quarterly. But this US dollar news, the FOMC and federal funds rate, very high impact, guys. That's going to be also quite late at night. Well, for me, late at night. I think for anyone who's not in the US, it's going to be quite late. So yeah, please do be aware of that. But today, other than this medium impact news, I don't think there's too much to worry about. Come on, gold. Let's keep moving. Daily also makes sense to continue bullish in the long term, because obviously now we've come down and tapped into this previous level of resistance. Now if we form a support on the daily candle, then that's your break and retest on the daily time frame. And in that case, Nicholas, if you're still in your gold sell at that point, you could be seeing some very bad numbers, because we could start coming up towards 1865 based on the higher time frames. So just be aware of that. Run is doing well again. Let's see what I should do with my runner here. Maybe close another bit. Yeah. Okay, so just secured some more of my runner. So I have about a 0.5 lot left. And opened a 15 lot, guys. Closed at the moment 14 and a half of those lots, and have a 0.5 lot running. Very, very nice start to the day. What is the market structure for gold? So we have the weekly is bullish, we have the daily is bullish, the 4 hour is bearish, and the 1 hour is also bearish, because I think the 1 hour is bearish. Let me check. This is our low point, which created the low. It's actually all the way up here, because these are all 1, 1, 1, and 1. So yeah, we are bearish on the 1 hour as well. So it's actually 2v2 bullish bearish, meaning that there's equal amount of buyers and sellers in the market. And you can see that we're ranging on the 1 hour. So again, that does make quite a lot of sense. Obviously, if you look at the bigger picture, I think there's a very good chance to see bullish momentum continue on gold, just because of this daily bullish candle which is forming. And we look at, okay, did we tap into an important daily level? Yes, we did. If we look at this previous level of resistance, obviously we made this very, very strong push on the 19th. We broke straight through this level of resistance. At some point, we are going to come back and retest that level of resistance, guys. That's how price actually works. You break and retest, right? So if we're going to come back and to that level to retest it and then start forming support on that level, that is our break and retest confirmed. So at the moment, we came to this level. You can see Friday's daily candle wicked into the level and rejected it. So you'll see that support forming on, let's say, the 4 hour and 1 hour time frame. Now, if we form support on the daily time frame, it's an even stronger indication that then if we start breaking above this daily resistance level which had formed, we can continue bullish. So that's why it's very important to look at all time frames, guys. Not just the 30 or not just the 1 hour or not just the time frame which you normally execute on. You need to have an overall understanding, because if you do get into a position and you don't come to realize that, okay, we're actually on a 4 hour level of resistance because there's clean candles on the 30 minute, then you could be in trouble if you try to take a buy on a 4 hour level of resistance. Because again, clean candles on the lower time frames may not be clean candles on the higher time frames. You can see here, this candle over here is a 4 hour wick. It's really hard to draw this, but you can see that clean candle is this 4 hour wick. So you can basically, based on the 4 hour, reject anywhere within that wick. So you need to have that overall understanding of all time frames, guys. Forming some resistance on GJ, which is great. This is exactly what I want to see to get that overall bearish continuation. Yeah, no stress, Nick. So let's just write in here. That is our first trade of the day. Definitely looking for opportunities on GJ, guys. I think that there is so much potential in GJ cells. Especially if we can get a 4-hour candle close. Yeah, exactly, Sharif. Always correlate time frames. Something that not a lot of traders do is looking at all time frames just to make sure everything's lining up. Because like you even said last week, it's a massive puzzle and all the pieces need to line up for it to actually work out. On the 15-minute looks much better. Yeah, I think that there's a really good chance that GJ does continue. Gold is still moving quite nicely, which is great. Just a little bit extra. But yeah, main focus on GJ right now, guys. If we can form this resistance, we have 30 seconds until this 30-minute candle closes. Form some resistance, that's basically our break and retest completed. Then I still obviously want to see us get a candle close below this level, but it's obviously then going to be more likely because it's going to indicate that we can continue bearish then. It would be great if we do get a bullish candle close. Which it looks like that is exactly what we're going to get. Okay, so we have closed bullish, but we've also have a massive rejection wick on the 30 minutes in that region, and now I'm again expecting this next candle to close bearish, and then I think that we could definitely see that continuation. And then if this next 30-minute candle closes bearish, and that will then be the close of this 1-hour candle, we can see hopefully this 1-hour candle get below this level that we have marked out. And again, that's a 1-hour indication that we're not respecting the level of support, and that then the next 1-hour candle we want to see tap into this area, break the low, and my entry will be at the break of that 1-hour candle. That's if we get it closing something like this, so strong bearish. For that to happen though as well, just back to that correlation of time frames, that would also be a 30-minute bearish candle forming, which is exactly what we want to complete this break and retest. So we just need to wait and see at this point. 4-hour candle close in an hour and a half, guys. So to wait for the 4-hour candle close to close below this level of 4-hour support, which we're currently on, we had it marked out earlier. You could possibly then run the risk of missing the move. Obviously, waiting for higher time frame confirmations is always better, but then you're going to run the risk of, okay, if the move does happen based on the 1-hour or based on the 30-minute time frame, you'll end up missing that move. Nice strong 30-minute, nice strong 30-minute candle close on gold as well. Still struggling at this 1-hour level though. Please, if you haven't, guys, do remember to leave a like on the stream. Also sub if you aren't subbed, and turn on those post notifications too. It all helps a lot. We're just gonna wait. I think if we wait about another, we can see what this next 15-minute candle does. This next 30-minute candle, what time will it be here? It'll be 11 o'clock here. So yeah, we can definitely wait probably about another half an hour and just see how things go. Do you want to try and let's see if we get this set up on stream? That will obviously be ideal. If you guys have any pairs or charts you want me to check out, just send it through in the chat and I'll do that. Obviously we have some time to burn. Check what other news we have coming up. Nothing. Again, we have GDP on Thursday, and a lot of medium impact news as well, unemployment claims and so on. And then Friday we have also some high impact US dollar news, a lot of US dollar news this week. So again, if you're trading any US dollar related pair, just do be aware of that. Can you confirm market structure for GJ? Yeah, so if we go to the weekly, you can see obviously weekly market structure is very easy. We bearish a market structure based on the previous weekly candle. If we look at the daily, obviously we need to identify the high or the low, right? So this is the high. Again, being able to identify that high and the low so easily comes with experience, because some people would be saying, surely this is the high. But if we go back a little bit, we have to identify the original high. So this then becomes the original high. You then look at, okay, where did we get our 2 candle pullback? There's one, here's 2 or more, right? So we mark in the low there, and you can see that we haven't exceeded that point. So we're still bullish in market structure. So the daily is bullish in market structure. Then we go to the 4 hour. And again, identify our most relevant high or low. I can see that based on how bearish we were on Friday, this is going to be our low. We're now going to look for a 2 candle pullback. Here's 1, here's 1, here's 2. So we're only going to be bullish about this area over here. So at the moment we're bearish in market structure on the 4 hour. Then we go to the 30 minutes. So at the moment it's 2v1. Weekly and 4 hour bearish, daily bullish. Then we go to the 30 minute. Now we need to again identify our most relevant low. So if you have a situation like this where all these look like they are in a similar situation, remember we always take into consideration the wick. We always take our first low which was formed, which will then be this one. And then we look for our 2 candle pullback. Here's 1, here's 2. So we'll have a structural flip above this level over here. So at the moment again we're bearish in market structure on the 30-minute time frame. So that gives us our 3v1 bearish, making sells my bias, and I think sells a lot of other people's bias. And then obviously if we look at all the time frames, it looks like the bearish market structure definitely has a chance of continuing, especially on the daily, 4 hour, 30 minutes. Are you still in gold? Yeah, my runner is still in gold. It's just kind of sitting about that level. CAD check Frank. Let me check that out. No problem. Okay, we don't have any drawings on here. Do a full-on breakdown. You can see last week, obviously, we had that bearish week, so our market structure is bearish. We also have a very similar situation to what we had on GJ last week, guys, where we respected the high of the previous weekly candle. So now if we come down and break the low of last week's weekly candle, there's a good chance that with the clean candles to the left on the weekly, we can then start filling some of that range or correcting some of that move up. If we then go and look on the daily time frame, our market structure, this is going to be our low. The point which created the low is over here. Have we got a candle close above that point? Yes, we have. So now we're bullish in market structure until we get below this area over here. So at the moment, weekly is bearish, daily is bullish. We can start marking out some zones in the 4 hour as well as getting our 4 hour structure. You can see based on this was our high. See, a lot of people would be saying surely this is our low, but we always, again, it comes with experience. And when you learn how to identify market structure properly, you know exactly which point to look at. So this is our high. This is the point which created a high. Have we exceeded that point? No, we haven't. So we're still bullish in market structure on the 4 hour. Another thing people would be saying is, how do we not take this as our high, but why do we take this as our high? We haven't got a close above the wick. So that's also really important. We can also now start marking some zones on based on the 4 hour. You can see we've formed some support on a previous level of 4 hour support. And then our most relevant resistance level is probably going to be the current 4 hour resistance, which we are forming. This candle hasn't closed yet, but it is currently forming 4 hour resistance. So it looks like we could be coming down to retest this low. Now we drop down to the 30-minute time frame to try and find out clean candles on the lower time frames to then find out areas to trade into. You can see here, this is our current 4 hour support level. So if we break below that, we find ourselves with some clean candles to the left. up until about 0.72310. So you would mark that in. That's also going to be the bottom of your 4-hour support. And then if we look at the resistance levels, I would say that your safest buys based on range are going to come above this level. And then again, why does that make sense? Because if this is our low, so market structure is currently bearish, we flip market structure above this level. So by the time we get up above this level, we're going to have more confluences. We're going to have another time frame which is bullish in market structure, making buys more likely. So of course, ideal and optimal buys would come at this sort of level because then you're buying at the lowest possible price. But what's the indication that we're going to continue all the way from down here to up here and then continue further? There isn't any confirmation because we don't have market structure on our side. So I'd be saying we have a 2v2. We have this and the weekly time frame, which are bearish in market structure, and we have the daily and the 4-hour time frame, which are bullish in market structure. So buys or sells could play out now. You need to obviously identify your regions with clean candles, and that's going to come above here and below here. Obviously, you can then look for trading areas within this range, but you need to wait for maybe a clean move to form, and then you can correct that clean move within this range. So I hope that does help out. You just got to be a little bit careful. I don't trade this pair very often. Actually, I don't trade this pair ever. So it could move pretty differently. Also, if we form some support now, we could maybe be looking to clear some of this range. There's only 10 pips though, and a 10 pip range, in my opinion, is definitely not enough to be trying to trade. Okay, it looks like my gold run is about to be stopped out of break even. Let me see what we have here. Yeah, stopped out of break even. So really nice first trade of the week, guys. Very, very happy with that. So Antonio, I hope that does help. I would be looking, obviously you have the 2v2 market structure, but those areas are where I would be actively looking to take trades, because obviously we have the clean candles to the left on, but within both of those areas, rather than trying to trade in a range. Similar to on GJ, some people could be trying to take trades here, but if we start ranging, there's no point in trying to take a trade anywhere in between this resistance level and this support level. It's just not enough trading range to trade into. So price is going to be bumping up and down because obviously we have resistance and we have support, where what we want to look for is big gaps in between resistance and support, and that's where the terminology clean candles comes in. Because obviously if we break above this resistance, it is going to be counter trend, but we have a big gap before we get to our previous level of resistance above our marked out level. And that's where you have your what's called trading range. So this is our range. You can see our range at this point is 24 pips. No problem, Antonio. Just waiting for this resistance to form, guys. Honestly, not much else too exciting happening. The move on gold has already happened, so it's not a good idea to try catch the crumbs now, guys. What you want to always do when taking a trade is you want to get in on the big move. You want to be part of this big candle. You don't want to be part of the small candles which come to follow up until this level. You want to be part of the big candle. Now that's always obviously easier said than done, but if you do miss the move, you need to look back then and understand, how could I have got that move? And in this case, obviously we were basing it on more than one time frame, but I would say, okay, if on the 1 hour time frame was impulse entry and the 30-minute time frame, on the 4 hour time frame, did it make sense? And yes, it did, because obviously we were respecting candle highs and lows. Oh, sorry, just lows and not respecting candle highs. And again, that's a big indicator, especially on the higher time frames, of which direction you're going to continue in. because these candles are a lot of data compared to a 1 hour candle or a 30-minute candle. What is your name? My name is Piers. P-I-R-S. Okay, we are forming this resistance now on the 30-minute, which is great, to be honest. Just need a clear break of this level. Nice candle close would be great. Next candle to wick up, form its top wick and break the low of this candle, and entries should be, depending obviously on where this candle closes, but if in this situation the entries would be at around 153.882. So let's see what we get. Again, like Zim said earlier, what could start happening is we start forming this resistance, but then we also start respecting the support, and then we get a little bit of a range, and then we get that overall move which we're looking for. But then it just requires a little bit of patience, and don't try to get involved in anything in this sort of area. Trading is definitely knowing exactly where you want to be involved in a move, guys. You don't want to just be guessing where should I be getting involved. You want to, and that's important, so marking out zones. You want to know exactly where you want to see a move happen. And that's why it all starts with being able to mark out a zone correctly. Because then eventually when price comes into the areas which you're looking to take a trade, then you get interested. Other than that, you shouldn't be tempted into taking any trades which aren't in your trading ranges. Let's see what this is looking like on the higher time frames. Okay. Another thing which I do want to talk to you guys about is obviously, say we do get a candle close below this level. There's two ways now of starting to enter this trade. When the next candle, if you don't take it on the candle close, what you need to wait for is obviously some confirmations after that. So there's two ways of looking at this. You can either start taking entries on the wick up, and then those are your aggressive entries, because then what you're thinking is, I'm banking on price then flipping bearish and continuing down instead of forming a support. So if you start taking entries on the new candles wick up, which you at the time won't look like a wick, it'll be a full body, and then you start taking sells as the candle starts to come down, then that's one way of aggressively taking some trades. The safest way to do it is obviously you wait for that candle to wick up, tap into the zone, which would then be marked out obviously by this orange line, and then your entry would be at the break of this candle's low, the previous candle low, the candle that didn't respect the support level. That would be your safe entry. So that's going to be your passive sells as opposed to your aggressive sells. High time frames look like GJ will be selling hard. I also agree. Let's see. Got the clean candles on the 4 hour. Got the bearish market structure. Broken yesterday's previous low already. Sorry, not yesterday. Friday's candle low already. Now we obviously just need to see those lower time frame confirmations. Everything's lining up perfectly. So let's wait and see. Nice strong bearish candle close will be ideal. Get our break and retest. And continuation. Got about 12 minutes till candle close. It's also coming towards the end of the month, guys. So by now we should all have an idea of how well we're doing, whether we're sitting break even, up comfortably, trying to make up for some losses as well. So this week, which is, yeah, it's the last week of the month. It's definitely not the week that you want to, especially if you're doing badly, that you want to be putting it all on the line. So I'd certainly suggest lowering risk, minimizing, if you are going to have a losing month, or you can see that that's going to be on the cards, then what you need to do is obviously lower your lot sizes just to try make the loss for the month obviously less. If you're having a really good month, I'd say that now this last week, how I normally work it, if I'm having a really good month, this last week is a week where I'm going to be holding trades for a little bit longer. So for example, these GJ sells, I do see them possibly becoming long-term holds. It has been a really nice month for me, so let's see what I can manage to do in this last little bit. And then obviously if you're sitting at break even, do your best to manage risk, and I would say just aim for those 10 pips to make sure that you come out of this month as a profitable trader, because then again you're putting yourself in the top 10%, guys. Any day that you're profitable, you're in the top 10% of traders in the world. Any month that you're profitable, you're in the top 10% of traders in the world. So just think about it that way. You've done better than 90% of people who are in the same industry as you. Because the rest of them don't have a clue what they're doing. Okay, let me just see. We might break off 4-hour low. And in that case, yeah, I'm also very interested to see what's happening here with this candle close. We have 10 minutes left, which is my only concern, because we may just get this push now. Just trying to think of a technical stop loss level. Do I want to be risky and take it at the break of this week? Which will be then the break of its current low, is my thoughts. Thinking whether I set a sell stop or not, guys. It will probably be around, let's see, 2 pips below maybe. Maybe 1.5. Okay, let's see. When price comes down to here, I'm just gonna have to make the call. Now we've broken the 4-hour low, its own 4-hour low. See, gonna try hold this one for as long as possible. Obviously need to manage risk. If price does start retracing a little bit, let's just see technical levels. Thinking stop loss above the current 15. It's gonna be fine. If we take that off, 92. About a 13 pip stop. I think it's definitely a much better idea to wait for the candle close, so quite tempted to just close this position. Just gonna have to wait and see. Ugh, I'll just manage it if it starts going wrong. Very nice, very nice. Keep pushing. Just trying to think how long. Down 10 pips. I haven't secured anything, guys. I'm quite interested in holding this. For as long as possible, especially based on these higher time frames. Looking at the daily, there's no reason why we should reject before getting to about 153.714. Even if that what that means is if price does come back to entry, do that retest and then continuation, I do see us continuing bearish. Because again, guys, we will at some stage come and retest this support which we've broken. It's just when. 4 minutes till candle close. So I was up over 10 pips, haven't secured anything. Gonna try and hold this full position for as long as possible. Second impulse taken today. Feeling a little bit a little bit risky today. We're coming down decently nicely though, so I'm happy about that. Nice. Very nice. Very, very nice. Almost feel stupid not securing at this point, but again, sometimes if it's been like in this situation, it's been a really nice month so far, guys. So if this does come back to my entry, so be it, you know, it's not the end of the world. Definitely need a... I think I'll probably definitely be moving this down. You secured, well done, Nick. Great job. Why don't you secure some? If I was definitely not having a good month, this would have been secured a long time ago, guys. But I do see possibility of a very, very big return out of this. I know it does sound a bit greedy, but it's if this does come back to entry, I won't actually care because it's I'm happy to let it run. Like I said earlier, guys, is obviously by the time it comes to this part of the month, one of three. You're losing, or you're down pretty bad for the month, you're sitting at break even for the month, or you're on very good profits for the month. And that's obviously in this last week how you need to base your trades. So if you up really nicely, you can definitely hold trades a little bit longer and see how things play out. And that's exactly what I'm doing. What lot size you normally use? Always fluctuate in between, for me, it's in between 15 and 20. 10 if it's a very high risk trade, but yeah, 15 and 20 lots. So this is a 20 lot sell. My gold one earlier was a 15 lot. Looking pretty good. So remember guys, maximizing profits comes with confidence, minimizing losses comes with practice. I said it last week. Something like risk management, you can't say, oh, I've had a good week, I'm not going to manage my trade. But when it comes to profits, if you have had a good week or a good month, then it is obviously you're going to be a bit more confident. It's not going to be that trade you're not banking, paying your rent or something like that with, then it's fine to let it run a little bit longer. And if it does come back to your entry at break even, it's fine. But something like risk management, you can never slack on. You can never stop risk managing because you think you've had a good month, because one bad trade can wipe out a whole month's worth of good trades if you just slack once. So that's very, very important to keep in mind. Risk management comes with practice. Maximizing profits comes with confidence and experience. Okay, so obviously it is a very nice close. I am expecting a bit of a wick up and then continuation. Let's see where we are now. I think at this point I honestly might secure some. We obviously saw the clean candles to the left down till about 153.649. We're coming down really nicely, so haven't secured anything yet. Probably going to secure just now. Just needs to push a little bit more. Stop losses at break even, by the way, now, guys. And I think I'm going to secure about 18 lots at this point. Around. So there we go. 18 lots secured. 2 lots still running. Stop loss at break even. Well done to anyone else who did take the trade. I know it was obviously a high-risk trade, guys. Taken 2 very high-risk trades on stream, so I don't blame anyone if you didn't hop on board with me or feel confident taking them. It isn't very nice not feeling confident in taking a trade or not feeling good about it. So again, guys, well done if anyone did take these sells or if anyone took the gold buys earlier. But I think that these were 2 really, really nice moves. We did talk about the sells, these gold sells in particular. Oh, sorry, these GJ sells in particular, the whole stream. And yeah, played out really, really nicely. Obviously high risk because it was an impulse entry, but sometimes, again, you just gotta go with your overall analysis. Fortunately, I missed it, waited for the candle close, and that's completely fine. That's one thing about waiting for candle closes. You got to be comfortable with the fact that you can miss a trade, and you got to be comfortable with the fact that that's going to happen. I've had many situations where I've been waiting for a candle close because I'm just not feeling comfortable enough to take the impulse, and I completely miss a move, and this is the perfect example. The key though, and if you can sit there and say you've seen the move happen and you missed the move and you're happy with that, you are doing better than 90% of traders, because if you were feeling greedy and had FOMO, what you would have started doing is taking entries when price came down to these sorts of levels. And then again, what I was talking about just now is when you see big candles, you want to see how can I be a part of this big candle. So for people who are doing that, hopping on the sell or the buy late, then you're just a FOMO trader, and then there's going to be big problems when it comes to your trading, So if you are able to say there that you missed it and that you didn't try to take the trade any later, then well done. Watching trades go by is just part of trading, guys. We are still coming down decently. It's almost, yeah, it actually is 11 my time, guys. So I think, thank you, Russ. Thank you for the like. Thank you for all the support. I think I'm going to call it a day there. I have an appointment this at 12 o'clock. So I do need to, in about an hour for me. So I do need to get going. I hope everyone had a good morning and managed to at least get one of these trades. If not, just wait for a bit of a pullback and then the continuation later to the downside. Please don't try sell at the lows, guys. It is super, super risky. And please don't have FOMO about missing this move. There's going to be plenty more moves left this week. That is for sure. So yeah, have a great rest of your day, everyone. I'll chat to you guys on the Telegram. If you obviously have any questions, send them through on the Telegram. I will try help you as much as possible. And if you haven't already, please leave a like on the stream and subscribe. And yeah, trade safely for the rest of the day, guys. And I do appreciate all the support a huge amount. So yeah, I appreciate you all. Thank you, thank you. Thank you, Stanley. Thanks, Nick. I'll chat you guys all on the Telegram. Cheers.